Honestly, I have to say, I'm a little disappointed in some of the rumors that we are hearing about tomorrow. It's being rumored that Tesla's robotaxi will only have 2 doors, 2 seats, and butterfly wing doors. Although I think butterfly wing doors would be cool and they should definitely have that on the robotaxi. How awesome would that be? 2 seats? That's not gonna address a large total addressable market. I mean, from Wall Street's perspective, it's all about total addressable market, scalability, and the timeline for robotaxis. If you're throwing 2 seats in robotaxis, that's not gonna fit for a lot of people that want to do it, let's say a typical Uber ride. 4 of you guys, 5 of you guys, however many that go to the bar and want to Uber home, like 2 people, that's really not going to work. Now, we do have more to discuss in regards to the robotaxis, some more rumors that are flying out there, but we actually did get some good news today out of Tesla, and some would say bad news as well. And I would argue that's why Tesla's probably not doing much of anything today. Tesla China's 2-week insurance number was revealed. It had its best week ever, registering 22,600 units at the end of the quarter. Last week's number was 1,700, which is due to the Chinese National Day holiday. So the week of September 23rd through the 29th, which was accounted for in Tesla's delivery number that was just released to us, was very strong. It was the best weekly number ever. Okay, well, I believe 2022 had one that was stronger. You came in at 23,000 for 1 week, but this is right up there at the best week ever for Tesla vehicle insurance registrations. Now, you do tend to see this week, the 40th week of the year, that's normally always low. In 2022, you had 2,218 registrations in this week. Last year, you had 1,000 registrations in this week, and you're at 1,700 for 2024. So I don't think that's terrible news. Maybe a little bit softer than some people were hoping for, but overall, I would say this is actually a positive. Now, Truist is coming out with their note for the Tesla event tomorrow. They say, quote, Tesla's robotaxi event unlikely to be positive catalyst. Truist says Tesla's upcoming robotaxi event is unlikely to be a positive catalyst for the company's share price, as it's expected to be less about new vehicle models and more about artificial intelligence, Truist Securities said Tuesday. The event, dubbed We Robot, is scheduled for Thursday. The electric vehicle maker previously postponed the event by a couple of months to allow it to, quote, improve the robotaxi, as well as add a couple of other things for the product unveil, Chief Executive Elon Musk said on a conference call in July. The event is expected to feature a prototype of the robotaxi vehicle scheduled for a 2026 rollout. Truist said in a Tuesday note to clients, this is what I'm disappointed about as well. If we get a 2-seater robotaxi and we don't get an expected rollout until 2026, look out below. Tesla stock will fall on that. Now, why this is a little unnerving for me, from my perspective personally, is a lot of these guys on Wall Street, they know people at Tesla. They get the insider information before we do, okay? That's a little concerning to me. If we either don't get guidance for the robotaxi network or we get guidance for 2026, I don't think Tesla stock is going to love that, as I've said before here on this channel many of times. And if that is the reason Tesla is underperforming by quite a large margin today, the benchmark S&P 500, that's not good. Now, I still want to be optimistic because, as I've said in previous videos, it doesn't make sense for Tesla to have a robotaxi event in October of 2024, but then not launch the robotaxi until 2026. Like, that is a very long gap that's unnecessary between the event and the actual launch. I think we probably get guidance for robotaxis second half of 2025. And I do think that would be positive for Tesla stock. And again, I think if you want to boil this down, the only thing that matters is, when do we get robotaxis? What is the guidance that we get from Tesla? No guidance or 2026 guidance will be negative. 2025 guidance will be positive, whether it's the first half or the second half of the year. Now, in this note to clients that Truist put out today, they say, quote, the vehicle is likely to be made using a manufacturing network rather than a production line and is expected to feature new technologies that drive costs lower, Truist analyst William Stein said. A less expensive powertrain will likely include a drive unit that eliminates all rare earth elements and 75% of the silicon carbide power switch content of Tesla's current traction inverter. This could serve as a negative catalyst for silicon carbide linked suppliers such as STM Microelectronics and ON Semiconductor, according to a note. A smaller size, new tech, and new manufacturing architecture are in service of a much lower price point, enabling Tesla to address a much larger total addressable market than the current Tesla lineup does, Stein wrote. The robotaxi is also expected to feature improved AI hardware and software, according to the brokerage. By late next year, Tesla intends to release a vehicle that will include most of the robotaxi technology, but that's manufactured on a production line instead of using its unboxed architecture. Stein said if Tesla were to show such a vehicle Thursday, it could be a positive catalyst for the stock. However, we think it's rather unlikely. Basically, what Truist is saying here is any new updates to a cheaper, lower priced Tesla coming to market, that's what's going to be positive for Tesla stock, not the robotaxi event itself. Now, generally speaking, I disagree with that. I do think the robotaxi event, as long as we get guidance for 2025, will be a positive catalyst for Tesla stock. And I'm not expecting to hear anything about the lower priced Tesla that is supposed to hit the markets by the second half or really middle of next year. I just don't think this is the event for that unveiling, but could I be wrong? Sure. Now, Benzinga is reporting investors with a lot of money to spend have taken a bullish stance on Tesla. Today, Benzinga's option scanner spotted 160 uncommon options trades for Tesla. After evaluating the trade volumes and open interest, it's evident that the major market movers are focusing on a price band between $5 and $540 for Tesla, spanning the last 3 months. I mean, this is really not new information. This is kind of what I've been calling out almost every single day. Over the past week, you've seen 1,173 different trades totaling $942.54 million with a positive order value of 63%. Now, today, you have seen 39 different trades totaling $22.2 million with a positive order value of 61%. So like yesterday, you had a positive order value of 84%. Today it's down to 61%, but that's still a good number. Now, what I've also noted in recent days and weeks is the shorts that are continuing to cover on their Tesla short positions. Short interest of free flow is down to 2.76%. You currently have $18.75 billion currently sold short in Tesla stock, totaling 76.69 million shares. You can see today you have about 407,000 shares that are being covered on. So there's actually quite a bit of short covering activity today, and that makes sense as Tesla stock has fallen from almost the 270s down to the low 240s. Why would you not cover on your short position when you've recently just gotten, I wouldn't say blown out on that short position, but depending on where you shorted, if you shorted in the 180s perhaps 2 months ago, you probably did get blown out on your short position. I think the day before the event, if you have a chance to get out of that short position, that makes some sense, and I think that's what's going on today. Now, as far as the broader markets, you are hitting a new all-time high today, and I have to say I'm a little concerned here as well, because the S&P 500 is just ripping higher for no reason. There's nothing that is prompting this. It almost feels like capitulation. See, a lot of people understand what capitulation means on the downside when markets just get washed out and people throw up their hands and they say, we gotta sell. Okay, this feels like capitulation to the upside, where people are saying, okay, we just got to get in this market, even though we don't like the valuations, we don't like the price, we just got to get in because markets keep going higher. When in all reality, Bank of America just trimmed their EPS estimate for 2024 from $250 down to $243 per share, and EPS estimates for 2025 are indicating 15% year-over-year growth is expected. That is very high. That's a very optimistic estimate for growth in any normal year, let alone a year in which the economy is clearly slowing down. You also, yet again today, have 10-year treasury yields that continue to go higher. 10-year treasury yields sitting now at 4.05%, up about 1.5 basis points today, and it's pretty much been going up vertically. Now, we do have the FOMC minutes that come out at 2 p.m. Eastern Standard Time today, and we'll be getting that in just a few minutes, and that can obviously move the markets for better or for worse, so keep that in mind. But I'm a little concerned because nothing happened today, and markets are having this very strong day. I mean, yes, a lot of it is being led by big tech. Apple's up 1%, Amazon's up 1%, Microsoft's up 1%, but some other names are down. Nvidia's break even today, Google's down 1.5%, and Meta's down almost 1%. The percent of stocks currently trading above their 50-day moving average is only moving up marginally today as well, up to about 56.1%. This is a rise of 4%, but only 2% of stocks are actually breaking above their 50-day moving average today. And you can actually see here that 2024 and 2025 EPS estimates have been getting cut pretty much across the board over the last, especially couple of months, the last 2 months or so. You can see 2025 here in light blue has really started to fall, right? And 2024 has really been falling throughout this year, but yet markets continue to go higher, just pushing that multiple even higher, which that can set the stage for markets to keep grinding higher if there's a lower bar and companies are able to beat that lower bar. You can see here revolving consumer credit contracted by $1.4 billion in August, the largest drop since March of 2021, and the second drop in the past few months. So typically when you see revolving credit start to drop, people are actually paying down their debt, and that is what happens when people are fearful about the economy. When people are up in the air on, how bad are things going to get, then yeah, you tend to see people try to prepare for that by paying down debt. And here you can see the EPS estimates still overall trading at very elevated levels, but the growth rate that is expected has fallen from about 15% now down to about 11.3% for next year. So at the same time, markets have been going higher, estimates have actually been going lower, which is typically not what happens. Typically, when estimates go higher, stocks go higher. When estimates go lower, stocks go lower. And that's a big reason why this is a little concerning to me. Again, what's happening in broader markets today. Also, you had US MBA mortgage applications that Walter Bloomberg writes here, wow, in parentheses, came in at negative 5.1% versus negative 1.3% during the previous week. So what's happening is mortgage applications are falling. People are not looking to buy homes as fast as we thought. Actually, something I've talked about for a while now here on the channel, it is this disparity between more homes being listed and less demand. Now, what tends to happen in a normal economy, supply and demand, right? This is Econ 101. If there's more supply and less demand, prices tend to fall. If there's more demand and less supply, prices tend to go up. Well, what's happened since February, March of 2022, the amount of homes listed has been at about 350,000 in 2022. Now it's at 940,000. Just last month, we went from 909,000 homes listed to 940,000 homes listed. Now, mortgage applications are down about 60% since the same period in 2022, around February and March. So you have more supply, less demand. What does that suggest for home prices? That suggests home prices could start falling here soon. If home prices start falling, that's a bigger problem for the economy. This is something that I'm early to, okay? I understand that. Home prices are not going to fall out of bed tomorrow, but over the next coming months, this could start to be a major problem. I just think I'm early to acknowledging the problem. Now, what's actually very interesting about today as well is you're kind of getting some pretty rough rhetoric out of the Middle East, but yet markets are not responding to it. Iran's Jabari says we're prepared to launch thousands of missiles at Israel. We'll hit Israeli military and economic sites if attacked. And in news that I reported yesterday, the White House, the Biden administration, said they would not help Israel defend another missile attack if they were not briefed on Israeli plans going into their attack against Iran. So I know this is getting confusing, but in essence, we were expecting some kind of call or meeting to be had before Israel's retaliation. That is actually happening this morning. Biden and Harris have a call with Netanyahu, and that actually began at 11 a.m. this morning. We really haven't seen much actually get better in the Middle East today. Now, of order of magnitude, as I've said before in other videos, you have Q3 earnings. That's the most important thing for markets. You have economic data. You have these geopolitical tensions, number 3, and you have the election. Now, all of these things can be potential fear catalyst for markets. But as I just mentioned here in this video, with estimates falling for Q3 earnings, I don't think Q3 earnings are going to be all that bad, although it's really more about the guidance for 2025 that we'll start to get. How does that guidance look? If guidance falls short of expectations, that's what really moves stocks. Now, we will talk about Tesla's robotaxi event a little bit more in the next video. My specific expectations for this, again, to the upside or to the downside, I will give you the good and the bad case scenario, or bull and bear case scenario, if you will, in the next video. But Tesla stock is breaking down a little bit today. It's down 1/3 at the time of recording this video, down to $243.62 per share, which the S&P is up about 0.5% again at the time of recording this video. These numbers could change by the end of the day today. You are seeing a clear underperformance from Tesla. Now, I don't want to be that guy, but we've seen this before where events or data or news is kind of leaked to big money ahead of time. Big money just kind of knows, and they position for that ahead of time. It wouldn't surprise me if the sell-off that we're seeing today in Tesla, although it's pretty muted. I think if the markets were red today, it'd probably be much worse. It could be some positioning by hedge funds and institutions for the downside, potentially following the robotaxi event. Again, I'm not in that camp, but it is a possibility that we have to acknowledge. And I think you should be prepared for that. You should expect the worst and hope for the best as far as what Tesla stock is going to do. Now, with that said, sentiment for Tesla stock today is bullish, coming in at 69, which is a great number. Yesterday, you were bearish at 33. Message volume today is high at 57. Participation ratio today is high at 55. So numbers don't look all too bad over here on StockTwits. The CNN Fear and Greed Index is marching higher as well today from 71 now up to 73. So getting a little bit more greedy and almost in extreme greed territory. Another just colossal problem that markets have right now is the VIX, okay? Yes, markets are hitting a new all-time high today, and the VIX is still at almost 21. It's down 2.8% today, sitting at 20.82. This would indicate there is a fair amount of fear out there, but yet stocks continue to hit all-time highs. This is something even Tom Lee spoke about recently, that we probably do get some downside in October because the VIX is sitting at such elevated levels. This means hedge funds and institutions are actually kind of fearful right now. They're kind of just sitting around like, hey, when's the shoe gonna drop? We're waiting. And it seems like nothing is happening. Now, we will talk about all of this a little bit more in the next video. Let me know what you think about all of this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. You guys have a fantastic rest of your day, and I will see you in the next one.